Welcome back. Well, Nigeria's manufacturing sector recorded a growth of 8.4% in the first quarter of 2013. Well, to discuss the outlook for the sector and the attractiveness of manufacturing in Nigeria, well, I'm going to be speaking with Usoro Essien, who's the head economic intelligence and strategy at Associated Discount House. Well, thank you so much for joining us, Usoro. Well, are you surprised at the growth rate of the manufacturing sector, given the infrastructure challenges players are facing at the moment?
Not at all. If you can recall, first quarter 2012, it was a lot slower, 5.3%, and that was because of some of the structural reforms we had in the economy at that time. January was a very slow month. This year, you expect a lot more optimism in the market, with the NSE doing about 19.4%. Q1 already. That tells you that, okay, the outlook on the economy is strong, and we expect the FMCG companies to actually drive growth in the manufacturing sector this year, and the manufacturing sector as a whole, because infrastructure is going to be rushed in the many 2 quarters of the year, because next year is an election year, so you would expect them for proper budget implementation. You expect certain projects to be rushed for the next 2 quarters, and you would expect these companies in that sector, FMCG, and also building and manufacturing, to post strong earnings Q2, Q3, and Q4 this year.
All right, then. Now, what's your outlook for the growth, in the manufacturing sector? Do you think a 10% is conceivable, in subsequent quarters?
I think way above 10%. Remember, we have a big infrastructural gap. So as that is getting filled, we have a low base. So as from a low base, you would expect double-digit growth figures. Yeah.
All right, well, I guess that's something to look out for. Now, we have consumer goods stocks, rally to record levels on the Nigerian bourse. Yeah. And many observers say this reflects the attraction of the consumer story in Nigeria. Do you think investor confidence is overblown?
Well, it's not really overblown. You'd like to take positions, right, before the curve reaches its peak. Basically, there are a lot of reforms in power. Now, power is one of the biggest, how do I put it, one of the biggest factors that you would look at when you're thinking of FMCG companies. If we had a considerable improvement in power, say, at the end of this year, you would see that drastically the overheads, the operating expenses in most of the FMCG companies would come down considerably. And you would want to invest now rather than later, so.
Oh, well, now, per capita income in Nigeria, is the highest in Lagos and Abuja, according to records. Now, there are two major markets, two major markets 100%. With a combined population estimated at about, 25 million?
Yeah.
Now, what trends are you seeing in the way consumer good companies are exploiting the opportunities in these markets?
Well, in Lagos, it's a bit saturated as it is. Yeah. However, because of the route to market, Lagos, Lagos in particular, the accessibility to the ports, more or less the purchasing power in Lagos. There's a bit of a difference between the purchasing power in Lagos and, say, your other 34, 35 states. Lagos is an investor heaven for anybody. Basically, the PMI that these guys did recently, FBN Capital, showed an increase of 59% from their base year for the first PMI. The second one came in at 53%. If you look at figures like that, and you now look at the global economy as a whole, where you're seeing quantitative easing like in the US, and you're seeing efforts to stimulate growth in these economies. For emerging markets such as ours, it's an investor's heaven, as in you see the demand and you see the growth story, and you want to come in and take key. And so these two cities, Lagos especially, Abuja has a different dynamic.
All right, then.
Yeah.
Well, talking about investment now, let's look at inflation. Now, April inflation at 9.1%. What's your outlook? It's a very quick one on that one.
Inflation, because of the reforms that happened last year, it's a single-digit environment we expect. I already set my forecast for inflation for May. Our model gave us around 9.0. So we expect inflation to be subdued, even though we will see pressures. But because of the base effects from last year, the high levels, you are going to see a suppressed inflation going throughout the year.